More than just business news, we're news for business people.
Hello and welcome to Bloomberg Quint. Well, we are taking stock of the markets, which aren't really looking very well right now. As a matter of fact, the Nifty is down as much as 150%. Beg your pardon, 150 points. But that said, we are looking at a considerable amount of weakness. If you consider the advanced decline ratio on the National Stock Exchange, we have as little as about 40-50 stocks which are advancing in comparison to well over 1,500 stocks which are on the decline. So with that particular ratio, it does look worrying. In fact, some stocks out there in the broader markets taking hit of as much as 20%, 50%, and these are some very prominent names too. So on the whole, substantial weakness. We just had to wait and watch whether or not there will be recovery eventually, Navneet.
Well, that's right, Agam. It's been a sharp fall that one has seen. Before we proceed, I just want to pull up the broader market indices. The small cap index is down 5.5%. The mid cap index is down over 3% in today's session, and that tells you the pressure point for this market remains the broader markets, which saw bigger gains than your benchmark indices, but that's not been the case in the last 1 week at least. Remember, the mid-cap index has already seen cuts of nearly 1,600 to almost 1,700 points. But let's get some market voices and get their view what's happening in the markets today. Joining us now on the phone line is Mr. Dilip Bhat, Joint Managing Director at Prabhudas, Lilladher. Mr. Bhat, good morning to you and thanks a lot for joining us today. What's happening in the markets? So what are your clients saying? Because there seems to be some panic which is there. Very sharp cuts have come in over leveraged stocks. A lot of the F&O stocks have seen cuts between 20 to 30%.
Well, I think the one-sided move which we had seen over the past 2 months in particular had really made a kind of a euphoric movement for a few of the stocks, the way the index had gone up, and I think quite a few stocks had really gone overboard. And possibly, they all were looking for some kind of reasons for some correction. Maybe budget provided some opportunity, and maybe the international markets, which have largely dictated the trend of Indian markets as well as the world markets. I think the US markets had really not done so well yesterday. So I think all this have really added up, and we are seeing the result of that. So I think that, of course, in a few of the over-leveraged stocks, as you have very rightly put it, has really caused a little more exaggerated panic on some of those stocks.
This doesn't look like a reaction because US markets were down and Asian markets were down, because the kind of cuts we are seeing in the broader markets is not something that we've seen in the recent past, at least in the last 1 year. Do you think it's got anything to do after the clarity on the long-term capital gains taxes come? Maybe investors are not comfortable now holding it for a period of 1 year, and they're better off paying 15% short-term vis-a-vis 10% long-term.
Sure, I think so. Some amount of selling was expected post the budget. And as what I said, it is nothing to do with one particular event of long-term capital gains or something to do with the budget. I think it's a combination of all these factors, as what I mentioned, the way the stocks had moved up, and the way the leverage was there on quite a few of the stocks. I think they found some reasons for correction. And possibly, I think when correction happens, it's always, we know, over the time that the mid-caps always takes it on the chin. It is the first to fall and the last to rise. This is the kind of scenario we have always seen for the mid-caps. But if you tell me that whether this is going to continue for a long time, I think no. I think maybe a couple of days we'll see a panic. Maybe it will spend some time consolidating on the sideways. And then gradually, I think in the long term, in next 8 to 12 months, we still remain a bit about it.
Mr. Bhat, to what extent will our markets be influenced by global cues? Because we are looking at some cuts across, the global indices as well. And that said, what can it mean for foreign flows when it comes to Indian markets then?
I think that is a very important question, and which will have a much more impact on the Indian markets. Because we have seen that the last 2 years, the U.S. markets had been good, and we also have behaved in line with that. Our trend, the trend trajectory has been northwards. But if there are deeper cuts in U.S. and other places, then possibly we will also follow that particular suit. So I think more than the Indian factors, it will be the world factors which will also determine, and that's I think a slightly difficult call to take. But by and large, the way the U.S. tax cuts have happened and way some of the big guns in U.S. are talking about U.S. stocks being underpriced, I think overall people are bullish out over there. But I don't think it's going to have there's going to be a rout of the markets over there. And so similarly, even I don't think it. Similarly, even over here, there won't be a rout of the Indian markets too.
Mr. Bhat, stay on with us. We're also joined by Chakri, Lokapriya, Managing Director at RCG Asset Management, who's joining us now on the phone line. Chakri, good morning to you, and thanks a lot for joining us today on Bloomberg Quint. Do we have Chakri? Yes. Okay. Chakri, I remember asking you this question yesterday as well. How will the FI community react to this sort of LTCG tax, which has come back after 14 years? What you see on the screen today, I'm not saying it's because of the FIs. I'm sure there are a lot of retail investors who would want to now sell off something which was there in their portfolio and be better off paying 15% short-term capital gains tax. What's your reading on the sort of cuts that one is seeing on the screen today?
Good morning. I think it's a tale of two halves. One on the domestic side, because of the introduction, you've seen some amount of retail selling, as you rightly put, they rather pay a 15% tax and take money off the table rather than wait for 1 year, which is now 10%. And also in the last couple of months, the run-up has been very significant in many of the mid-cap counters. And so except barring the late entrants, a lot of them are still in the money. And of course, on a day like this, there is also some amount of rub-off of people watching the screen and rushing into the sidelines. Now, as it relates to FII investors, yes, it is a dampener because in terms of what it does is it now links FII flows to the earnings growth potential of the markets. When earnings growth goes up, accelerates, you will see greater inflows. And when it diminishes, you will see lesser inflows. Because now there is an additional cost of doing business with India, which is the 10% tax that is introduced.
Chakri, good morning. Are there any pockets of the markets that you're keeping an eye on that after a substantial correction you'd like to, place your bets in or maybe place positions in then eventually in the long term?
Yes, indeed. Yesterday's budget focused on irrigation, infrastructure, are these two areas which are big areas, and of course banking are the three areas that we're looking at. And some of the stocks are correcting for technical reasons today, and I think they offer attractive entry points in the coming days as the dust settles.
Which are those stocks that you would be looking to buy at these lower levels, if you could name them?
Well, for instance, there's an F&O ban on Jain irrigation,
right.
So that has led to a lot of
unwinding
in the market. Well, that company actually does really well in the irrigation space, which is the thrust of the business. Then you have Nagarjuna Constructions, which has recently concluded a QIP. They've raised some capital to strengthen their balance sheet. It will do well in the infrastructure space. And in the banks, whether it is Yes Bank or some of the PSU banks, which are correcting very sharply today, the big ones, even if you look at Canara Bank or Union Bank, these are names which will all do well given the budget focus and the bank recapitalization program.
Mr. Bhat, I'll take the same question to you. What are the pockets that you're keeping an eye on that after a substantial correction that we see would offer good opportunity to get in and build in long positions?
I think the airline stocks look pretty good and interesting on a sustainable basis. I think that's something where we are going to see a good volume growth in terms of the passenger load factor and operating leverage also coming into play. So some of these airline stocks like Indigo, SpiceJet, Jet, all of them look pretty good and interesting. I think I agree with my friend out over here that the infra space also looks pretty exciting, and I think a couple of stocks that we like, apart from L&T, it's Nagarjuna also, and there's a company called RPP Infra that also we like quite a bit. So these are some of the pockets that we are looking at the moment.
Mr. Bhat, I'm not very sure if you cover this stock, but that's looking like the stock of the day. At least PC Jewelers today at one point of time was down over 50% in trade. It's seen a bit of recovery, and the market knows that Vakrangi, which is being locked in lower circuit for the third straight session, bought 0.5% stake in the company. Any idea what's happening here? What's the reason for these sharper cuts? Because the earnings were not that bad from PC.
Well, I think PC Jeweler per se, I think it's not, we are not covering the stock, but from whatever we have interacted with them, I think they're quite okay, but I'm not in a position to comment on the valuation. But currently, as what you very rightly put it, what is hurting the stock is the controversy in which it is mired, and I think that possibly will remain as an overhang for some time.
All right, Mr. Bhat, we leave it at that. I'd like to thank both Mr. Bhat as well as Mr. Lokapriya for joining us and giving us your outlook on the markets currently, which aren't looking too good right now. There is a substantial amount of correction. But with that, we'll wrap this show up. But don't go anywhere because there'll be plenty more updates to come in. But so far, that's all we have on this edition of the F&O show. Lots more lined up, so keep watching Bloomberg.